What is up, you sexy bastards? I am going to show you exactly what I've been doing with my personal finance during this uncertain times, this crazy coronavirus, and exactly what I've done so I feel a lot better about it and hopefully inspires you to think a little bit differently or better about your financial position. So, first off, a few weeks ago, 3 weeks, give or take, I woke up and I was like, holy shit, I lost $50,000 today. It was in my Schwab account. So I don't know if you guys are in Schwab. I use Schwab for a lot of my banking. I've consolidated a lot of my finances there. There's an affiliate link. Just kidding. I'm not here to sell you anything. I'm just going to show you exactly what I've done. But I woke up $50,000 down and I was like, I called my stepdad and I was like, yo, I'm really scared that I need to go get a job. And then guess what? No one's even hiring now. So I'm fucked. But I said, all right, this is just getting too much. So I talked with him a lot. And then I went for a bike ride. Another day, another hat. I'm wearing a Rafa hat today. So I went for a bike ride and I came home and I said, dude, I am going crazy. I checked the stock market. I'm basically spending my whole day looking at the stuff and I'm looking at Wall Street bets and I'm hearing text messages and WhatsApp groups and my friends are shorting it and they've made $200,000 shorting. And am I missing out? And so I had to quiet the noise. And I highly recommend you do that immediately for your finances, for your job, for your relationships, whatever you need to go do. So I came back to the office and I wrote out my investment thesis. And this is the exact financial stuff that I've been doing. And I'm going to show you step by step of everything I've done. So hopefully it inspires yourself. So first off, I just started writing out what is important to me. So number one, appsumo.com. If you don't know the company I help work at, it is the number one site for software deals. So if you're starting or growing your online business, that is the best place to find your products or save money on new products. So I was like, AppSumo is my cash cow. That is actually a bigger percentage of my net worth and future net worth than the stock market will ever be. Number two, I'm spending a lot of money looking at this stuff, and it's not helping looking at it. And one of the things that Aswath Damodaran, he is one of my favorite Twitter followers, favorite people to follow on Twitter. I'm a disciple. He actually said something fascinating. And it's going to come out in a future episode. I highly recommend you go follow him. He said, the more you check, the person who checks the stocks more often is more likely to have a worse performance. Think about that. And I thought that was so powerful that he said that. So I was doing that a lot of it, even though it's an overall small percentage of my portfolio. Number three, I don't want to worry about this. I want to worry about sharing a lot of information. I want to worry about growing AppSumo. I want to worry about being a good fiance. And I want to just not worry about how the stock market's going to do every day because I don't have control over it. And that is one of the crazy things about this time in our life is anxiety and lack of control. So you got to put together a plan for your business and especially for your money. So number four, I think long-term, there's certain companies that are going to be around in my lifetime. And so I want to pick those up and buy more of them. And I just want to worry less about it. And the next thing up is I think certain industries are just going to get fucked for the foreseeable future. I think cruise lines, not looking so hot. I think people are going to be scared for a long time. But planes, you're probably going to fly again. I'm probably going to fly again. Hotels, probably going to go to a hotel in the future. Airbnb, maybe, maybe not. Real estate, I think, will be significantly struggling for the foreseeable future. Why? Because I think a lot of people are like, hey, I'm just not going to pay rent anymore or for some period of time. And two, I think because of so many of you guys working at home, just like me, a lot of companies like AppSumo and Sumo Group, which is our parent company, are going to say, do I want to be spending $40,000 a month on a place that I don't use on weekends? It's not a strip club. I don't use it at nights. It's not a bar or a restaurant. And it's just sitting wasted money. It's stupid. And so a lot of people are going to reevaluate how they're spending money because I think in the future, I'd rather just pay mortgages and rent with that $40,000 for everyone who works at our company. You can come apply for a job and come work with us. Get a job, not get a job and a career. This is not someplace you just come work and be a lazy ass. So certain industries I think are going to reduce. So I want to get out of those industries like real estate. I want to have insurance. So I'm not sweating the downside. If it goes down a bit, I'm fine. But I want so I want to hedge. Okay. So if it goes down, I'm good. But if it goes up, that's what I'm hoping for. But maybe I don't make as much, but I'm not having to worry about it. Aswath, I talked to him and he's got a podcast coming out with me, hopefully very soon. He said the same thing. He calls it his sleeping test. And he says, I don't want to have to not be able to sleep at night. So you don't want to have so much percentage in the market that you can't sleep, or two, so much in companies that you're like, I don't know how this is going to do. So I want to reduce my thinking about the portfolio. And I don't know about you, but I don't think the market will go down to zero. But I do expect it to stay volatile. So I want to hedge against that. And then long-term equities, over the long run, based on all these articles, they generally bounce back. That's what they all say, supposedly. But all the charts show that. It's just crazy how many charts we see nowadays. So here's where I'm at currently. Currently, I'm at 60% cash, 40% equities. Everyone needs to do what's best for them. And Aswath, again, this guy was so good. He said something really powerful. He said, show me your portfolio and I'll tell you about yourself. This guy is amazing. And I love that he said that. And what he was actually referring to is showing people if they're doing day trading. He said he's never seen a day trader retire with the maximum wealth. He's always, gone down because you're day trading, and that stuff is mostly like gambling for a lot of us. So he says your portfolio is a mirror of yourself. And so for me, for the longest time, I've always wanted more cash because I can't control the stock market. I can't control myself, and I can do my best to control AppSumo and the businesses that our team helps run. And so I've always been heavier in cash. And I don't care if inflation fucks me over or my mom fucks me over or you fuck me over. I'll still have the cash, even if cash goes away. But that's where I've been today. And so I thought, what actionable plan do I want to do so I don't have to worry about this? So the first thing is I want to reduce my equity exposure. So even if there's these rallies this past 2 weeks, it's been the worst and the best in 2 billion years. They always say that, don't they? And so I want to reduce my allocation. So my fluctuations are at 50 to 70,000, and you can maybe do the math to see how much is in those accounts. But I was like, I just don't want to be worrying about that. So I said, all right, I'm going to reduce the 40%, just sell it down to 30%. I'm going to take that 10% that I've just sold and put it in cash. And then I'm going to split the 30% between a wealth management firm that I use. I use adviceperiod.com. They're really focused on long, boring things, which is great. And, I wanted to basically give them more flexibility. So say, hey, you take 15%, you do whatever you want. I'm going to take the other 15% and just buy boring, long-term value-based companies that I believe will be around in 10 years. So that was the one of the first two things that we did. Reduce my allocation. And that's probably the most important thing. Where are you at in your life? And how much risk tolerance do you have? I'm 38, and maybe when I watch this at 48 or 58 or 108, I'll be more risky or less risky. But ever since I was a little kid, I lost $5,000 buying at-home stock. And Jewish people, we hate losing money, right? And so ever since then, I was like, I don't like the stock market thing. I can't control it. I'm okay if everyone's getting crazy rich on it. I'm going to go and try to get rich on things that I have more direct control over the outcome of. And so that is where I've decided my allocation. You need to decide what's best for you. I do think the market's good. But someone like my fiance, it's like, I don't really know any of this stuff. So she's actually probably more going to be in cash. And if you're getting close to retirement, you might want to be even higher in cash. And so it really depends on your age. So I split up the equities half and half between me and the firm. Number 3 is I sold all real estate-based equities. So all of my REITs, so real estate investment trusts, I just sold them. I was like, I don't really care where it is. Long term, I think real estate they're gonna boom and bust, of course, but I think they're gonna really struggle. I think a lot of corporations are gonna reduce their office space. I think a lot of individuals, I don't know if they're gonna default on mortgages, but they're gonna have a lot of delayed payments. I know in Austin, there's a 60-day non-eviction notice. So all these landlords are not gonna get paid for 60 days. So I said, I wanna be out of it. The next up thing I wanted to do is that of the managed percentage that I'm in, so my advice period guys, they're buying VT, which is your Vanguard Total Index. So I'll just put that. It's a Vanguard Total Stock Market. So it's the VT fund. And they're buying a lot of, so they bought majority of the 15% in that, and they've put a few of the other ones into bond funds. So just kind of boring ass bond funds. So I have an 80-20 stock split with them, meaning 80% of what they buy is in stocks, 20% is in bonds. So a bond is a promise to pay back. So either corporate or government. And so that's what they've done. And they've done an 80-20 split between those two things. Stocks to bonds, okay? So next up, with the long-term things of my money, I basically said, of my portfolio of the money that I'm managing in stocks, how many of them do I think are going to be around in 10 years? How many of them are going to be impacted for these next few years? Because I don't want to be day trading. I don't want to be worrying about it. I don't want to bet on companies that I'm like, yeah, I'll see you in 10 years with a lot more money. And so what I've been doing is I sold a lot of the ones. I did sell Square. It was up. And then I ended up buying Visa. Why? Because I think consumer spending is going to get pulled back for a very long time. But I think online spending is going to be increased. And Visa is the pipes and the network for that. I don't think Square has an advantage there. And so I'll go over and I'll show you the actual stocks that I own in just a moment. So I've been buying more Amazon. I've been buying more Microsoft, Verizon, JP Morgan, and I've bought in 3 others. I've bought Budweiser, Chevron, and then I bought Berkshire Hathaway. So why have I invested more in these companies? Even as it's gone down and it's gone up, I'm basically trying to, and this is what my stepdad recommends, it's called dollar cost averaging, but his exact strategy that I believe in is that you have to know your allocation. So right now I went down to 30%. And so I do want to get back up to 40% at a later point. And so I'm basically taking the 10% or whatever, 5% if you're doing the math. So I'm taking my percentage and I divide that up into fourths or sixteenths. So what that means is that I take the amount that I want to eventually get back to, and instead of just buying all at once, I do a fourth, and then a month later, a fourth, and a month later, 16th. And so I'm slowly buying it on ups and downs. And you have to be disciplined with that. And I'll talk about Bitcoin and how I'm doing it with that as well. And so I've been doing these stocks, Budweiser, because they went down from 100 to 40. They have a lot of cash in the bank. And I think people are drinking more alcohol now than ever. And I think Budweiser has 8 billion in the bank, and they will figure out other ways to evolve, and they can last. So which companies can sustain are going to have an advantage. Verizon, you didn't cancel your cell phone bill, but you might have canceled other services. Microsoft, they've transitioned to a lot of online software things. It's going to be critical for the future of work. Amazon, they're going to get even stronger after this shit. I hope you all know that. JP Morgan, that's my bank. So if they go out of business, I lose all my money. I think that they have a good amount of cash in the bank. I definitely think they're going to be challenged. I just am a long-term bullish on banks. I don't think our system's going to let them fail. Chevron, I didn't really get this one. But basically, if oil prices are down so much, eventually people say, well, it's so cheap to use oil, I'm going to go use more oil. And then Berkshire Hathaway, they went down a lot. And I was like, wow, they have 128 billion in the bank, and they're only worth $400 billion. So that means like Geico and all the stocks and everything they own is only worth 400 billion. Something seemed a little off with that. So those are the ones that I've been directly buying into today. And so I've been doing dollar cost averaging, purchasing these back in the market as things are going up. I haven't been buying for the past few days. Today is actually March 27th, and the stock market's down. I don't know when we're going to recover. And so you have to use your best guess. I believe these values are right, and I want to do these purchases for a long period of time and not think about it. That is my investment strategy. That is my thesis. Buy, don't fucking think about it. Be a holder and be a hodler for the long term. And so my stepdad has this. I haven't actually enacted this, but set a threshold to sell your stocks. So if you have made 100% over the past 10 years or 500%, my stepdad believes, and I do think there's an interesting point, that you still want to gain a profit psychologically. So if it ever got to 5% of profit for that stock, he would just sell all of his stock and at least take the profit and know that he's playing with house money at this point and he's up in the game. So that is something for you to consider where you're at. Next up, as the economy is unstable, as the American just prints free money, you get cash, I get cash, everyone's getting cash. That worries me. So I've been slowly buying. I've bought crypto for years. I don't have a ton, but I just always consistently buy it. And so I've been buying it back even more now. There's debate whether there are assets for it, and it's very speculative and all these different things. I just think there's a future where there's not a controllable government currency, and Bitcoin is a leader. And I've actually purchased a lot of drugs and a lot of streams, football streams from Bitcoin. And so that is why I just think there is a way that as it becomes more liquid in the future, it'll become more popular. So what I've done with Bitcoin is that I did make a purchase, just a set purchase, and now I've basically turned on $500 a month of just buying it back in again. So whatever you're comfortable with, don't do what I do, right? You need to do what's best for you. I'm just trying to tell you how I'm thinking about it and why I made these decisions, and hopefully it inspires you or guides you in your financial decisions. And so I'm a fan of Bitcoin. I'm doing a little bit more of that. This is something. The next thing up is something that Aswath Damodaran. I highly recommend you check him out. So yeah, let's check out Bitcoin real fast. I was just talking about it. So it's up to 6,600. I think I got in at 4,100. I bought in at 5,800, and I'm going to keep buying in. I don't know what the price is going to be. I just think since there's a specific limited quantity, 21 million of them, there's a future where my children or my children's children start using coins that just can't be printed forever, like we're doing with some of our currencies to prop the economy, which is a whole nother discussion. And I'm going to show you my stocks just in a second so you can see the stocks I bought. So the last thing that I've actually changed literally this week on my plan, and I think you have to revisit your plan. You have to stick to your plan and be able to revisit it to say, hey, are these beliefs still true for me? And so the last thing that Aswath was talking to me was called these 10 baggers and fallen angels. And if you're an investment pro, you're like, no, I know all this shit. I'm like, fuck you. Why are you watching this then? But for everyone else who's with me, that I'm trying to share exactly what I'm doing, he is saying that you need to pick up some percentage of your portfolio that's risky and that might 10x, right? So that's a 10 bagger. That's what that means. And some of them are fallen angels, right? So they were high flying stars like Uber. Then they went public, went from 38, got down to 14. But you have to think maybe they're a fallen angel. They could 10 bag. And is there a likelihood in the future that they will be a significantly larger company? Could be the same with airlines, right? Maybe they're going to come back. So kind of a similar question. And so what I'm still finalizing on, and this is something, normally 5% of my overall net worth is in risky, right? And mostly that's just in Bitcoin. I invested in a bar that basically just went out of business. I invested in a church, just went out of business. I invested in 3 startups, Teachable, Buffer, and Huckberry. And actually Teachable just sold. So I ended up invested 10 G's, and I think I'll end up getting 60,000 back. Maybe. I haven't got that money, but that's what's supposed to come. I can't pay my bills with fake money yet, except Bitcoin. So I do think you need to allocate at least 5-10%, depending how your risk tolerance. I have friends who are crazier. My buddy Brandon in LA, this guy's crazy. Like he's got, he's just much riskier with money than I am. And that's fine. Everyone should just live whatever way they're comfortable with. So I am trying to increase a little bit more on my risk side. So Bitcoin to me, a little bit on the risky, but also some of these riskier investments like Libsyn. So I bought Libsyn stock, LYSN. It's where I host my podcast. I think they have 20,000 plus customers paying $20 a month. To me, that's a likely profitable business. If you look at their financials, they have subscription revenue, which is good and bad in these times. And so I think that's a potential 10 bagger, like a Spotify buys them or an Apple buys them, or hopefully they can execute their business better and they can 10x their growth. And so I think there are other companies out there. He was talking about Uber as one of the ones that he bought. And so I'm looking to increase a little bit more of my risky ones, because what he comments on is, these dividend stocks, which are great. So even if they go down a bit, they're still paying a dividend if they have cash. The dividend stocks, he says, it's, Aswad said, it's chapter 33 of 35, that the stocks will do well, but you already kind of know the ending. They're not going to go crazy. Microsoft's not going to double immediately like some of these other companies want. And so here's the last piece on the investment thesis. Let me go up to the stocks, and I'll show you the stocks that, in terms around the portfolio that I own. So the last thing he said is that you got to hedge your stocks. And so, not that he said, this is something that I believe, is that I just don't want to think about it. And so this is you guys want to hear something weird? Well, I'm going to tell you anyways. So I bought this stock. This is something that my stepdad and I have been looking at. It's called DXD ProShares Ultra Short. And so this is a leveraged fund. And I don't even fully entirely know what that means, but it's a short on the market. So that's number one. And number two, it's leverage, meaning that this fund that is buying the short is borrowing money. So you get a bigger return, but you also have bigger risk. And so over the past 6 months, you could see it's gone fucking bonkers. So I've bought in at 30, 32, 34. I've sold out at 39, and then I bought back in. And so here's what's really interesting. I lost 50,000 and then 70,000 and then 40,000. I think my total net worth down from all the things that have been going on are around 400,000, give or take. I'm not sure the exact amount. And so what's really interesting about this, though, is that I was buying this. I bought $30,000 worth. And I bought this, and I think I made like $3,000. And because I was like, I'm like, I think the market's going to stay unstable for a long time. I don't really want to day trade. I don't want to wake up, which I was doing for some mornings, worried about this stuff. But the thing that was interesting is I bought this, it went up, I sold it, made some money. And I think what I liked about this is it felt like I was in control. Does that make sense to you? It felt like I said, I'm not going to sit around and just let the market be the boss of me. I'm going to be the boss of the market. I'm going to be the mom of the market. And I don't think you should go and buy this one specifically necessarily. But I think that I like that I was trying to do something about it versus just sitting and complaining or just being an observer or having to worry about it. And so the way that I've set up my portfolio is that I bought some of this, and I'm just holding it. So market goes up, great. My portfolio is going to rise a lot. Goes down, at least I'm making some. So psychologically, I feel like in control of the situation. So these are the stocks that I've transferred. I'm observing. A lot of them you guys have heard of. There's nothing magical here. I'm also a conservative investor. The other thing that I think is really critical as you're doing your investing is, what do you know that others might? Like, what industry, what vertical, what people, what products are you buying? What services are you paying for? We've been using Zoom in our company for, 5 years now, being a paying customer. I didn't know how much more upside they have, but I guess there's a lot more customers than I expected. So they have more upside. I bought Slack on the IPO and I've lost money. I think I bought Slack at 26 or maybe 36. So I think I'm down a good amount. But I can just walk you through the different ones I've bought, and hopefully they kind of spark some things. I bought Shopify because at Sumo, we were building a lot of Shopify apps 2 years ago. And I said, well, we're going to build these apps. If we do well, great. If not, why don't I buy Shopify? So if they go up, at least we'll still do well. That actually has done well. Apple, I actually think I'm going to not sell my Apple shares because they have so much cash in the bank and they have an okay dividend. I don't want to bet on Apple in the future. Why? Because I'm not as impressed with their stuff besides the AirPods. I think hardware is good, but I think software is going to be a lot more, and tech software is going to be the real winners in the future. And Apple's a hardware company. Like, you look at the software they built, it's kind of shitty. They do have some advantages with Apple Pay, with Apple Music, with some of the subscriptions that are out there that I think can hold them off and be their next potential phase of growth. But it's questionable to me. I'm not as confident. I have AT&T, Verizon, because guess what? You guys don't cancel your phones, and I think they're going to be more necessary with internet infrastructure. I think there's other things that could challenge them, but I think they're here to stay and they have good dividends. Tesla, I own a Tesla. I think the stock is overvalued personally, but I just think it's cool to own it. Amazon, been big bullish. I've been buying more of that. Berkshire, I think they're undervalued. Slack, as I told you about. Libsyn, I told you about. Budweiser went down so much. and they have a lot of cash in the bank. And I think in a few years, people are going to come back and drinking beer or whatever, White Claws, Tiger Blood, and so forth. Microsoft, I haven't owned for years. My step and I were always kind of haters on it, just like most people, and they've come back. And so that made sense for us to pick some up. And not just them picking it up, but I think they're definitely positioned to be even bigger coming out of this. And I think there will be even bigger winners and even bigger losers that are going to come out of this. Who's coming out stronger? And so which side do you want to be on? I've been watching PayPal. I mentioned Visa. I've been watching PayPal. I think they're pretty well valued. A lot of times when I look at these companies, I look at what's the market cap, and I'm thinking, how much more upside do they really have? Facebook, I will never buy because I got to let go. So fuck them. I hope they go to zero. But it's just interesting to be observant of them. I own Intel stock because I work there, so I got a discount. I don't know how they're really going to win. I definitely think you're going to need more semiconductors and things like this in the future. But I think Amazon and Apple are going to do it themselves. Microsoft potentially themselves. I think Intel is going to be challenged, but somehow they're actually have done relatively well. Google, I bought a long time ago. I'm not as bullish on Google for now. I think long term, Google is a great investment. Why? Because for now, I think ad pullback is going to happen. Same with Facebook. But I think long term, Google does have 2 billion people using Gmail, paying $5 a month. That's a pretty damn good thing. You can turn on a lot of people subscribing to that. Walmart, I didn't buy, but I just wanted to observe. I almost bought Disney a while ago because I was so bullish on Disney Plus. But I've been kind of watching that, and I picked up some Chevron, just a little bit, a little nugget, just a little tidbit, because my stepdad was so bullish on that. And that's kind of the portfolio, pretty much of what I hold within the equity sector. So this is my investment thesis. The thing I'd recommend for you is do what is ever best for you. I am hoping from me sharing how I'm doing my finances, it sparks some thoughts. It maybe makes you take a little bit more interest. One thing I've always thought, and I'll end it with this, is let me show you my wallet. So this is my nomadic wallet. My money is always in order. So this is not tested, but yeah. All right. God, otherwise it look bad on video. My money is always in order. You see how it's always facing the same direction? I always keep $40 on me. And the biggest thing about that is the people that pay attention to their money take care of their money. And the people that have their money organized, I think there's a Susie Orman thing, are paying attention to their money and they're taking care of it. And they're ones that are probably doing better with the money and they can worry about it less, or they can just be in more control of it. And so ultimately for you, you have to decide what you want to be doing. And I have faith that you can do it if you want to commit a few hours and invest for yourself for the future. Go kick ass. I love you guys.